Hello all again. This is a big one. This time we're going to be talking about MicroPayments, another 3D portfolio company, and we're here with Hassan, the CEO of TODAQ. Hassan, please give us a good overview of the company and how you founded it and your track record.
Thank you so much. Yeah, no, it's great to have you on and finally get a chance to talk. I know we've been trying to set this up for a while. So I'm
Definitely.
glad we're here at this moment. And this is the right moment. Yeah, it was a bit of a path to get here. And I've spent 25 years in the space of technology and business. I love building things. I love building things that are hard, that everyone tells you you can't do or it can't be done.
Mm.
Uh, but it's also really important for me to do it with good people and know that if you do succeed, it's going to be something where you can feel the change on the ground for everyone you know, everyone you work with. And whether it's in play or things with entertainment or things that are critical, right, to being able to live or grow a business or make a market work, having that broad applicability. And it's these kind of wicked problems that always got me attracted. I started off with about a decade or so in the Army, working on the technology side and being in a number of places around the world. And I think there I got the bug to build businesses because as soon as you stop people fighting within a particular country, the first ones that emerge and try and rebuild are the entrepreneurs.
Mm.
So I had the privilege at that point of meeting a number of entrepreneurs in the tech space,
Mm.
whether it was TV or radio businesses or other kinds of tech businesses who, were emerging from the rubble and being like, I want to get back in business and build. And that's where I knew this is what I want to do when I leave. I spent a number of years consulting with McKinsey on the digital and business technology side, all around the world. And I had a chance to personally experience certain kinds of business challenges and see how a lot of small, medium, and large businesses were all experiencing the same kind of problem. And one of those in the digital space was all around transactional friction. And we live in the world and we experience this kind of pain all the time, so we don't notice it. We think it's normal. So when you go and tap and pay with your credit card and do an online payment and all the fees and all of those things flow out, we don't really notice. We accept that as this is just the way it is. Or we don't notice because something is not possible. It was never put in front of us. For the World Wide Web, we live in a world where whether you're a business or a consumer, everything is offered through subscriptions and lock-in business models, which means that now when we look at publishing, media, video streaming, sports, music, blogs, or things like digital healthcare platforms or education, you're going to subscribe, you're going to make an ongoing monthly commitment. And it's understood that, for a business, this makes sense. Who doesn't like recurring revenue and some predictability in cash flows? But it does mean that the long tail of customers, the 98%, are unserved. Ask yourself, how many times have you run into a subscription paywall and immediately, like your arm knows what to
Yeah.
do, or your brain has registered, you're already moving to the X to click on. 9,999 people out of 10,000, you will go straight to abandonment. The opportunity that, wait, maybe there is a world where if you just want one or a few of something, and almost like you were walking down the street and you saw a vending machine and you pulled coins out of your pocket, you put them in, you pressed the button, you got where you wanted, you walked away. That should be possible.
Yeah.
Then there's a flip side of an analogous problem, which is the long tail of unserved and unmonetized content. So imagine all of the newspapers and all of the media arms. They have massive catalogs of archived news and content. You have the same thing with sports platforms for football, for basketball, and more, and music, etc. So what happens, it's a little bit like, when you go into a museum, they put a very small part of the collection out so everyone can walk around, and they have this massive vault. And, every once in a while, they take something from the front and they bring it into the vault and they haul something else out. So 98% of the museum's collection is unenjoyed, and there's just a bunch of archivists down there who are kind of looking at it. Same problem on both sides. So this micropayment mission that we went on for the last 6 years and succeeded with, it was really saying, how do you unlock a world of content and services that a bunch of people want, and on the other side, they can't get it. Let's make a market. And that was the motivation behind why go and launch into this. The challenge, right, or the thing that definitely made me pause, and I think when I started the journey, I didn't understand just how hard it would be, and that was a good thing. That ignorance was actually a strength at that point in time, because had I known, would I have kept going? I don't know.
When was this? When was the starting point?
This would have been 2016.
Yeah.
When Tufi Dan and I had the first discussions around this. Um, all of us independently had initially looked at blockchains and some of these other technologies as potentially a solution for the problem, but saw very quickly, because of the efficiency and the scalability and a number of other things, that it wouldn't solve it for everyone everywhere. As we got going down this path and as I dug deeper in, then I understood just how hard this was, because when the World Wide Web first blew up in the early mid-90s, micropayments and the ability to solve this market problem that I'm talking about, that was the original dream.
Yeah.
The builders of the World Wide Web created standards for micropayments. They dreamed of a world where you would just be able to walk and, from one system to another, one website to another, a person to a website, you just be able to make a small payment. You wouldn't need a payment processor or anything else. The software fabric of the web would support it. You'd get what you want, you'd go. So they made a whole bunch of standards, and there's all kinds of projects, and they all failed. And subsequent to that, a whole bunch of others tried. There have been over 100 attempts over 30 years to try and solve it.
Mm.
And we went and studied maybe not all of them, but as many as we could, definitely over 100. And we found those three things that led to failure in every case. Three problems, and the challenge is you have to solve all the problems beautifully. You can't just solve one or two of them. So the first problem was cost. It's just the cost of processing a payment. You pay an interchange fee, you pay a payment processing fee. Well, if you're buying something for $20 and online you pay 30 cents of interchange, 3% on top, well, you might grin and bear it. But once you get down to a smaller payment for one song or an individual service or anything else, that's a lot. And it stops being economical. And to solve it, you actually have to get rid of the cost base. It's not good enough to remove the fee for the consumer and make up your cost by charging someone else, because you're just playing a shell game. You're moving around. That's problem one. Problem two is control. The simple way to think of control, this is an analogy that Dan Tolliver likes giving, which I particularly like. If you charge up your Starbucks app with points and you get coffee, and you could be a business and you get AWS credits or ChatGPT credits, and you get cloud compute or AI services. But you can't spend your Starbucks points on cloud compute, and you can't spend your AWS credits on coffee, because the value is now locked up in those platforms. That's very different from when you have coins and cash in your pocket, because at that point, you have control, you have possession, you decide where you want to spend. And that's what good looks like for the second problem of control. The micropayer has to have that control.
Yeah.
And then they can decide where they can spend anywhere. And then the final one is convenience. Back around when the web exploded, in the early 90s, I think it was 1993, one of our senior advisors sent me a very fascinating video of the first, credit card tap and scan payment. I think it was in a Burger King. And the reaction of the people in the Burger King is most thought it was a fad and it wouldn't go anywhere. Well, we know how wrong that was. It's everywhere for everything, for every single physical checkout you can think of in every country. But online, the only place you get that is you're in Apple's ecosystem. You're in Amazon Prime's world. You're in some big giant. They have a walled garden. They know your identity, Hector. They know your payment and account information. So they can expose a single purchase button that you tap and you pay and you're done, and the convenience is there. But for everything else, there's a cart, there's multiple steps to a checkout, there's all sorts of pain and inconvenience and friction that happens. If you want to solve pay-as-you-go micropayments for anything across the web, you have to get rid of the cost of payment processing. You have to give full control back to the micropayer, whether it's consumer or business. And it has to be convenient as one or two or maybe three taps in a few seconds, and you're done.
You've got the convenience really of having that one click, but we haven't got control, and the cost is not possible. So that's a very good point
Correct.
you make. This has been a 30-year dream in the making, and you guys are the first. So therefore, you're able to boast of all of these applications because you are able to do them. I just wanted to touch on, obviously being the first, you've obviously got some huge names backing you. I know you were just in a Vegas conference, and even more banks and co are signing on. I guess perhaps we can talk about maybe Google, CIBC, RBC Bank, and Cambridge, because that's public information at the moment, but perhaps there are others that are public that I don't know.
Yeah, sure. So there's been a whole number of partners, customers that have been extremely helpful in this journey.
Mhm.
And whether they were large or small organizations, the people in it and the teams were great at putting themselves forward and the resources of their organization forward to help sort of further this kind of mission, right? And
Mhm.
creating trusted open micropayments for the web. The Canadian banks, RBC, CIBC, they've been great from a banking services, a cooperation, a problem solving kind of point of view, because ultimately, whether you're a micropayer or you're a business that's accepting micropayments, using the TODA technology, our tech works in a way where a simple way of thinking about it is in the physical world. You go to the ATM, you put in your card, and you extract cash. But that cash is physical, it's paper and dollars. What our tech allows you to do is exactly the same thing in the digital world.
See.
So you can go through a payment gateway
Mhm.
and extract out pure digital portable cash that you can control and you can possess. And when you go and pay someone else, it doesn't require a payment processor or us or someone else to stand in between or to be paid or anything else. But that said, every business needs to connect into the banking world and into banking services. So these cooperations and partnerships with the banks so that healthcare, education, entertainment, sports, micropayment, and TAP, which is the name of the product, those enable businesses have a seamless experience and be able to go back and get embedded banking services and the like. Um, the other thing that has been very helpful as an example is that we've just started a collaboration with Google. The TAP product and the TODA technology, it removes the cost of payment processing. So we don't need to charge for transactions. We never will. And as we continue to open source the technology, the transaction-free fee friction is going to disappear, right? The more that market spreads. But the other place where we get a huge amount of efficiency is digital trust. Who is this counterparty? Are the assets valid? Is the transaction honest and verified?
Yeah.
Someone's giving me financial or transaction records. Who created it? Was it messed around with? Is it honest? Is it complete? All these questions on digital trust that happen when a transaction occurs. Well, it turns out with the TODA technology and the TAP solution, you get digital trust for free.
Mm.
So we're starting the work with them of creating open source, instant free drag and drop tools. So as an example, if you were a business and you're receiving micropayment funds, and then you're compiling things for your compliance officer or maybe the tax authority, and the question is, these funds that were received, were they honest? Were they verifiable? Well, now that becomes a few second instant free exercise, where
Okay.
normally when you think about that kind of due diligence and compliance, it's expensive.
Yeah.
So on a number of levels, partners like the banks and the cloud
Mhm.
companies are being great enablers for the rest of the market. So businesses can grow and consumers can have trusted finance. And again, even on the side of our customers, we're learning new things from them
Mhm.
every day.
Mhm.
Like you pointed out a few minutes ago, we're the first, which means there's this whole new world opening up. So
Mhm.
every time we sit in front of a customer, they suddenly end up with 10 ideas, really pragmatic and
Mhm.
valuable, of what could they do with micropayments. And they're like, I could do this, or I
Mhm.
could open up this following service that was never available. And now, sort of customers can come by and get it and do the following. Through that process, we're learning a ton just from our customer base.
And just on the trust and obviously all these collaborations, does it require everyone to sign up? It sounds sort of like a blockchain or wallet, like we see in crypto, but not at the same time. So are people storing, is the money being stored, I guess, with you guys, or does everyone have their own wallet and then they make the payments and then the banks connect in and sort out the trust and verify people?
There's a number of ways to do it. I'll describe a few that are all either functional now or rolling out in the near future. So the flow of funds circuit that we're doing in North America is with US dollar denominated funds. So let's say you encountered a video streaming site and you wanted to watch just one half of the sports game and you just wanted to tap, pay 75 cents and it'll play the half. And you got to go back to work after that. But it's your first time as a micropayer. When you go and tap that button on your laptop or your device, it'll immediately say, hey, we don't detect your wallet. Maybe you've already created one using your email, or maybe you need to. Either way, just enter the email you want to do and you enter that. And within seconds, a wallet node is created and you get presented with a gateway and an option to go and load funds into it. And you might decide, well, you don't want to, throw $100 in there right away. Maybe it's
Yeah,
only $1. And you'll pay 75 cents to watch the game and have a quarter left over.
yeah.
So you'll go through a payment gateway at that time. The funds will end up in an omnibus account with one of the big banks, and you end up with a US dollar denominated fund inside your wallet, which is acting like pure cash. And that means that your software node can split that apart. So if there's a dollar object, it's technically what we call a TODA file. It will split it apart into 75 cents and 25 cents. It will assign control of the 75 cents to the sports streaming platform, and then it will send those unique funds over to the sports streaming platform, and it's done. It's exactly the same as if you reached into your pocket and grabbed some coins and you handed them over. It's just digitally replicating that.
Also make a good point about, you're not putting huge amounts of money on the platform. You're putting a five or a tenner because you can go to, I don't know how many decimal points you can actually go down to, but this is just so you can make these micro payments. So it's not, so I see what you're saying there.
Yeah. And like technically we can go down a lot, right? We can go down to the thousands or millions of a penny. Pragmatically, what we've seen with the use cases we've encountered is somewhere around a tenth of a penny.
Mm-hmm.
The market value and the consumer value is more fuzzy.
Mm-hmm.
So currently in the product right now, we'll go down to a tenth of a penny. That's a bit funny because even if you loaded $1, that means you could theoretically go and spend that 1,000 ways.
Mm-hmm.
Now, if you tried to do that on today's payment rails, you probably pay over $200 in interchange and payment processing fees. Whereas now with us, it's just frictionless. The other nice part that happens is once you pay the streaming platform, they can take the 75 cents and, as an example, split out a quarter and instantaneously pay the franchise licensor of the actual content that they're showing. So now your cash conversion cycle down the supply chain has gone from plus or minus 60 days with all the back office costs,
Mm-hmm.
and it's gone down to seconds. And any of those counterparties, whether it's the streaming company or whether it was the content licensor or the content owner in this case, as they collect funds, they have an ability to either use those within the decentralized Toda world in this fashion, or what they can do is go back through a gateway service and have funds move to their bank account or receive other banking services.
Easy, very, very simple, and finally being solved. And it's great that you guys are doing that. I mean, in terms of, you sort of touched on the business side of things there from an investor's perspective, and obviously 3D are an investor. So let's start by, so maybe I should have started earlier, but how did they get involved in the first place? Were they there from the very beginning in 2016? And yeah, tell us a bit on how they benefit on the business side of things as well.
Sure, I'd love to. So we spent obviously a bit of time bootstrapping and having things be kind of founder-led. 3D was there as what I'd call the original sort of founding investors.
Wow.
And like most of our investors, 3D has been amazing, But they do share a few common characteristics we found with our most successful investors. Number one is being they're builders themselves.
Mm.
They've built businesses, they understand what to do it, and that DNA and those activities have never left them. The second is they have a vision. They've got curiosity, and they can look into the future and have a really good sense of what's possible in terms of the very big, long-term, disruptive kind of changes.
Yeah.
Not things that are bubbles or, sort of flashes, and it's the fashion for, the year or that 2 years, and, there's a run at the market and then it disappears or fades away, but where you have sustainable, enduring value. And I think the following is, and the third one, which is almost the most important, is they're not afraid of pain, and they're not afraid of the upturns and the downturns in the market cycle. Yeah, like Sheldon himself, he's been a great mentor, and he and Jackson and the entire ThreeD team has been fantastic. And if I look at them and a few of the other major significant founding investors, they've shared those few characteristics. We've been very fortunate as a result of it. As you pointed out, this was not a typical tech startup journey.
Yeah.
Where you have a market idea, you build a product, you get into the market after a year or two, and then from there you start building. It was actually building an entirely new technology base over 6 years. And that requires an iron stomach and a very, very cool head.
Definitely. And then just two more points directly related to ThreeD are obviously, like you say, they're really good at spotting disruptive companies early on and going through the process with you. They also help on a number of collaborations. I know AIML, a huge collaboration there. I mean, 1.4 billion people need micropayment blood pressure reports, and then to be able to have that on a micro or daily payment level is super beneficial to that space, and I think that's really good that they've put the two together there for you guys. Can you tell us a bit more about that press release and the relationship with Paul?
Yeah, that has been enormously pivotal. Paul and the AIML team have been wonderful. And I think one of the biggest things there that you need to make it work is, look, when I was in McKinsey, we were doing a lot of technology deals, outsourcing deals that were very large, as well as rescuing deals that a few years later had gone south, and now it needed recovering. During those days when we went and looked in and said, well, why do things fail? Primarily, some of the biggest drivers were around things of, are you physically meeting your partners often and working together in person? Is there a particular culture that in good times and bad times will keep the team moving together and collaborating and communicating and being honest and sorting out those tough issues? So I'd say in this case is, yes, there's having the vision to sort of make the connect and make the link. But we co-locate a good portion of our team and the AIML team. So you've got a particular synergy that's running where between sort of ThreeD providing the collaboration space and us being able to come together and do that. And then there's the culture part of it, where you've got both us, AIML, ThreeD, that have a particular way of working, a particular way of thinking about opportunities and solving and executing things. So all of that has come together so that we were looking at the overall opportunity of micropayments and what that could do to revolutionize healthcare access. Like you pointed out, I think there's over 1 billion people, maybe 1.5 billion, somewhere in that, it's a lot, that have some kind of high blood pressure or hypertension related issue. And most of them can't afford today's digital health offerings that are subscription-based, $100 a month. You're knocking out most of the market. Who's going to pay $1,200 a year for that kind of thing? But now with micropayments, for first line, if someone said, I need to have a really good blood pressure, heart rate, variability, ECG measurement, high fidelity, once a week, I need to get a first line, first triage diagnosis that's telling me the essential basics of what I need to do. And I would like to have full control of my health records. so that when I go and see the doctor or a hospital network and everything, I have everything. This would be nice to have. So now with the micropayments, you could realistically do that in total for, $5 or $10 a year, which was just unimaginable until we showed up. And then the next part became, well, it's not just a cost problem, it's also a patient experience problem where healthcare can be very intimidating. Everything around what you need to do with the documents and the rules and the insurance and all of that. There's a really steep learning curve. All of these kinds of services and the bureaucracy around them has become more complicated. That in itself creates more friction, more stress, more fear for a person or a patient. So how can we combine that into an end-to-end solution where micropayments is an essential piece, but it's one ingredient of a few? I looked at some of the work that was sort of being done across in that group with multimodal narrow AI avatars that could be properly trained without hallucination on the right kind of data and services. And if you walked up and said, hi, the AI avatar is a first line of who you'd have contact with, could walk you through a health flow properly and get you past that first stage and then onwards to whatever help or enablement you needed. So then we combined the two. And for the first time now, we've got an AI that can micropay and transact. You'll ask for something, and the AI will bring up the diagnosis, the health record inside the chat as an object. And you just tap, and you might pay cents for it, and then you get it. And we called this AI conversation checkout. So between the envisioning of what was possible to actually having it out and working, 2 months happened blazingly fast.
Yeah. I wasn't totally aware. I know you've got some demos on your YouTube channel, and one of them has recently been that, and that has been extremely quick, and I didn't even see that coming. But just touching back onto 3D, it sounds like they're just way more than investors. They totally understand you guys and what's going on. I saw a press release maybe that was half a decade old, and it's definitely gone under the radar. And it was for 300 million or nearly 300 million TODA notes. Can you explain what they are or the perks that they give for someone who holds TODA notes?
TODA as a technology will allow you to turn anything into a portable bearer asset. You could take a US dollar, you could take a Canadian dollar, you could take your driver's license, agreements, health records, it doesn't matter. They all turn into unique, verifiable bearer assets that can bounce and be transferred system to device. You never have to ask the issuer. You don't need to ask anyone's permission in the middle. So obviously, if you can do that, then you need a way of paying. And we said, all right, we understand that there'll be many forms of payment using this open fabric. It could be dollars, it could be reward points, it could be Canadian Tire dollars, like that kind of, it doesn't matter. Let's create our own native form of payment to start with. And that's where the TODA note was born. And we looked at what was happening in the blockchain and crypto world. And I get it. It has a business model. There's a way people make money and there's a way people lose money. I would say there's probably on weight more speculation and far less actual functional at scale things. So we wanted to solve some of those challenges that we saw. So we put a few conditions in place where we said, all right, when we put this TODA note out, it has to be useful. We want to start first with critical and discretionary services that businesses and humans want to trade with. And we want to do it in a way where it doesn't require any speculation at all. So that when you're making a decision as a consumer or as a business, you're thinking about the product or the service you're either producing and delivering or that you want. You're not thinking about some sort of game or token economics underneath. You're thinking about what the primary market is. So with those design principles, we went out and we did a lot of testing at the technical level, thinking about the economics, looking at different use cases. So from 2017 till 2023, we tried a lot of things. There was a lot of failures, there was a lot of learnings, there was a lot of successes, but those were our testing years to understand how to deliver TDN. And during that time, as investors, as participants, as others came in and were putting in capital and all kinds of other forms of value, we created an initial sort of, nominal supply of TDN. And at that point, what was it worth? Nobody knew, right? We pragmatically ascribed a value of zero to it. This was a project, right? It was
Yeah.
you had to believe. And at that point, because I mean, ThreeD came in, they invested, they reinvested a number of times in the good times and in the bad. So very, very steady.
Mm-hmm.
And they accumulated this notional store of this TDN. And by the time we hit last year, we had cracked all the 100 pieces of the problem of how do you come out with something functional and useful, will do all these wonderful things, and it will fit within micropayments. So now TDN is just in its first form a decentralized US dollar denominated regulated prepaid card or kind of e-gift card, which once you have it, you own it, control it, you can split it apart, you can pay anyone for any kind of TODAQ service, they can pay anyone else, and it's got gateways back into the banking system. So now at this point, you've got TDN kind of with this form of a dollar. And as that market starts to grow and it accrues revenues to TODAQ, then that means that the holders of these TDN royalties have effectively, if you think of stocks and a dividend stream or anything else, it's a royalty stream. It's probably most analogous to a mining royalty stream. If you thought about someone goes and creates a mine, they get investors in. The investor invests in the mine and says, okay, you're building a gold mine and I'm getting a silver royalty stream for all the silver byproduct. So then as the mine grows and they start to, sort of produce more things and sell, there's a stream of things coming up. This is just, it's a digital version of that. So quite different from blockchain mining, because in this case, the base or the foundation of it is just production and delivery and trade of products and services in the regular market. And that's one of the standards we had. So that was kind of the origin and sort of where TDN came from, and what it is right now, and why is ThreeD sitting on this pile of TDN.
Yeah, and just touching on that, you were saying the value obviously when it was started was zero, but is there a value right now? Are they about to be valued? And then you were basically saying that it's not just a value, you are getting a dividend and a royalty from these. Are you able to touch more on that?
Yeah, it's a very, very simple structure. When micropayers want to purchase goods and services, healthcare, education, doesn't matter, and they load up on value, what they are purchasing is TDN. So you put in $1, you have one TDN. One TDN is equivalent to $1.
Right. Wow. Okay, that's
you
big.
Then you then pay a platform for products and services, and some of that is automatically micro distributed to us for the services that we are providing that platform from our software. As we accrue revenue, some of that is then immediately micro distributed to the TDN royalty holders, which is also then ThreeD Capital.
Yeah.
So a little bit of what was created using the micropayments technology and the TODA technology was an entirely new way of thinking about how do you handle the flow of funds. If we thought about what I just talked about in the last 30 seconds, you have a business, customers pay the business pays its costs, it pays its supply chain, it has its profits. From the profits, the board makes a decision quarterly or yearly or whatever else it happens, the dividends are issued and, something comes out to investors. So in that whole stream, there's this much time and about that much administration cost and decision making that's happening. And what we wanted to do with TODA and TDN was wipe all that out, crush the time, crush the cost.
Yeah.
So now it means it is March 31st. Customer who has 10 nodes and each node is attached to a particular piece of content and service that they're making micropayable. Those nodes collect revenue for the service charges we have around those. On the 31st, it micro distributes a little piece over to TODAQ. So now it is 12:01 on the 1st of April, and TODAQ has a bunch of revenue from a customer. TODAQ's node then splits off a piece and fires it over to the royalty holders. So now you've taken out all of the back office and administration cost in terms of moving money across different instruments and between business entities, and you've wiped out the time as well.
Does that mean the businesses that are signed on effectively all have the notes, and then the consumer is the one that's in control?
Correct. Anyone who has TODA notes is in control and in possession of those, the same way you would be in control and in possession of the cash in your pocket.
Yeah.
You're the bearer. You decide where you're going to spend it.
I think that's helped me understand it quite quickly there, and I can see what you say. It's a lot quicker this way than has been done previously. I guess this is a funny question, but who would you say you're putting out of business? There's a number of applications we've talked about. Payment process is probably the number one thing to be you're working with banks, you're not against them. Who do you think you're actually putting out of business?
Yeah, it's a good question. I mean, look, first and foremost, we love to focus on the plays because it's fun, right? Want to work with a bunch of happy people.
Yeah.
Where you can add the most value, where you can make your partner successful, make your customers successful, and grow. So all those good places are like the banks,
Yeah.
the telcos, the cloud companies, the mobile phone OEMs. Those are all natural partnerships. The other place in terms of companies that really like us is if you are producing a good or a service that you're providing to the market, you probably like us. If what you produce is digitally native, like it's all digital, then in the near term, you really like us, as well as customers, right? So those are the groups where they're all smiles. If you depend on transaction or broker fee revenues or any of that administrative stuff that's in between all of, the first part of what I talked about, well, you're probably going to have some challenges with us. Because when we show up, we're not saying, Mr. Payment Processor, we want to take your revenue because you're charging $1 and we're going to charge 50 cents. What we're saying is quite different. We're saying that dollar you're charging shouldn't exist. We're rolling out a technology that's taking the cost away. It's actually the business and the consumer that's going to keep the dollar. We're not going to get it either. No one's going to have it except the people who originally had the money, and they don't have to shell it out anymore. And by the way, this tech is being open sourced and we can do this all day long. So that becomes a difficult conversation with certain companies like Payment Process and others. But it doesn't mean it's all bad. Companies, look, there's always been disruption in the market. And even on the payment processor side, there's payment processors where they receive revenues from a number of other sources. And the most innovative of those companies will figure out ways to partner, to adapt, and move through. So I don't think that's quite black and white, but certainly the challenge you talked about, that's very much there.
Yeah, what this is actually leading on to is, and you can talk about, and the next question is Free the Creator, which is one of your programs. But does that mean, I guess, things like Patreon are kind of head into trouble because you'll be starting programs like Free the Creator? Perhaps you can tell us a bit about that and how you're helping content creators obviously monetize their audiences.
This has been a very fast thing that appeared. For the TODAQ micro team, we're all traditionally very business to business, critical services, enterprise focused, and that's our strength. Back last summer, when we created the first proto product or capability around micropayments, and we would be presenting during meetings, and sometimes you'll meet someone in a cafe or a hotel lounge. And I noticed that the wait staff were paying very close attention to my iPad and what I was saying. And I initially thought that this was about tips, micropayment tips, why not? So finally, one day I asked one of the wait staff, I asked her, and I said, you seem quite interested in micropayments. And she nodded and said, yes. And I said, is it about tips? And she said, no, I'm a musician. I have to do 2 gigs to make a living. And then it hit me. And I was like, Hassan, you're a dummy. So then what happened is over the next few weeks, everywhere I went, I kept asking the wait staff, so what do you do? And it turned out all of them were either creators, artists, writers, or one person adjacent to that. And it was always the same problem that popped up. From there, we then started moving into the music industry, the video industry, publishing, writing very, very quickly. And we were hearing of the challenges from all levels, from large platforms, medium-sized platforms, and from the individual artist and smaller studio.
Mm.
And out of that, Free the Creator naturally emerged as what I'll call the seed of a movement where creators started on their own, recognizing that if they were armed with micropayments, they could connect with their audience and fans directly.
Mm-hmm.
They could monetize and host their own content.
Yeah.
And they wouldn't need, us or kind of whatever else to do it. So that's sort of where Free the Creator kind of began. And right now there's probably about 50 or 100 different artists as sort of initial champions. And they're starting to get together every month. I'm actually going to an event in about a week or so. And I think there's about 50 of them gathering. So this is one of these kind of quiet, underground, impromptu things that just appeared. And I would love to tell you that this was some master plan that as part of our strategy, and we saw it as like, no. The artists and the creators told us they're the ones that lead it. We're honored to support it and help give that some fuel. I'm really eager to see where that grows, because it's one of those things. As part of an open source community, you always want stuff to happen spontaneously and to start to grow on its own. This is one of the ones that we should have, but didn't anticipate.
I think there's two really good points coming off of that. Is obviously Patreon and payment processors take huge fees, and PayPal take huge fees. You're potentially offering an alternative. And then what you touched on earlier about, having a museum and only a tiny bit's on display, and you've got all this other stuff where there's a whole audience that could be, be monetized. You're probably looking at like maybe 1% of the convert. Maybe you're looking at 10 or maybe 15, 20% of people will convert if you can offer an alternative and a cheaper route to market for those people, because they're all on your site already. They're obviously interested to a degree. They must be interested.
That's totally right. And we're finding that it turns into a very, very quick argument. I mean, just think of writers as an example. So if you put your book on Amazon, the deal you will get is 1/3 to 2/3 of your revenue, depending on how you structure it with Amazon, 60 to 90 days later, with very little transparency or recourse. So we show up and we're like, how would you like to be able to offer your book for sale in whole or in part, chapter by chapter or individual sections that people can instantly get, and you can take 98 or 99% of your revenue the next day, and it's all under your control. And that's an easy 20-second sort of decision.
Yeah. I don't, maybe I'm totally off the mark here, but we're talking about micropayments. But for these creators, how big could a transaction be? Like you say, it's the next day.
The way that we have created the product right now is we're good up into the thousands of dollars, right? Beyond 5 or 10,000. I believe we would be creating a new product with a whole new set of security and other features around it. But going to micropayments was a business decision, not a technical limitation.
Yeah.
It's just micropayments was such a greenfield in that space from, $1 to 1/10 of a penny. And most digital services and pieces of content, if you just take a single piece of it, is down in that zone. But we can go quite a bit higher. We've got a good number of our customers where they figured it out right away. So we started with micropayments. They stopped. They said, wait, you can do any kind of payment.
Exactly. That's what I was thinking.
And they're like, okay, so we're doing all the other payments too. And we're like, okay, sure. You're correct.
And that could be you could easily diversify into so many different things. I guess just one last time, maybe go over some of the favorite applications that for this product. I mean, you don't need to go into detail, maybe just some top line details like the subscription model, like the creators. Maybe just list a couple of things just for viewers, and I'll obviously click.
Two or three things. Obviously, the healthcare one that we've talked about, enormously meaningful and given the access. Education for modular skills-based education, so that you don't have to save up and then, go and buy a course, you could actually, with the bit of cash you have, learn and improve as you go.
Yeah.
Because time is one of our most, precious resources that we don't get back. So people who have to save up for 6 months, a year before starting a course, this actually means that now you can learn as you go,
Mm.
and you're not going to lose all of that time. And on the discretionary side, looking at video streaming, sports, music, entertainment, it is definitely around monetizing those very large archives and catalogs
Mm.
using AI conversational checkout. And the one I put on top of it is there's a great partner. They're called DoTalk AI. There's the number of AI companies we're doing, but they wanted to create a live audio multimodal translation capability to help bring people together.
Mm.
So now that means is we're bolting up with them and we're going to link them into everything else we do, along with other translation services. We're a bit agnostic. But what this means is something like the healthcare service or the education service, or going to, speaking to the AI to get the publication or the video you want. You can actually speak in your native language to that AI and have it respond to you in the same fashion.
Wow. Maybe more of a personal business question is we've talked about how these nodes give you royalties for the holders. How does TODAQ how do you guys make your revenue? Do you take a fee and then it goes to the businesses?
So the way we earn our revenue from our customers is we don't charge for transactions. Our customers attach a node onto each piece of content or service that they want to make micropayable.
Yeah.
We charge a service fee for all the security features, the record keeping, the inventory management, the connection into the banking system, this whole complete suite of services. So we charge 1% of the value of the assets held in the node up to a cap of $100.
Oh,
And
okay.
that is just automatically micro distributed out. We don't bill or invoice our customers. It means, as an example, customer has 3 nodes. One node doesn't make anything because, I don't know, they attached some popular content or customers didn't know about it. We don't charge them anything. Another node makes $5,000. We would charge $50. Another node makes $20,000. We would charge $100 because at
Not chargeable.
10,000 revenue or $100 cap, we stop. So it ends up being an extremely efficient and affordable solution. We charge for some of the banking and gateway services, and that's the only other place we charge our customers. Conversational checkout is a very, what I'll call, gold-plated end-to-end. I mean, you have your own automated salesperson who
Mm-hmm.
is there all day long, closing customers.
Mm-hmm.
We've got a separate charging model for that.
Mm-hmm.
It's very, very basic.
Sounds extremely, generous. I mean, is it because you just know you're the first people into the space, that everyone basically is going to sign on, and therefore you don't want to be charging more than 100 per business that comes on, because you could be charging more, and no one would really bat an eyelid if that makes sense.
Yeah, so
Yeah.
I think it's more around aligning incentives. A
Mhm.
business might have 100 nodes, they might have 10,000. It just depends on how many pieces of content and service they're offering.
Yeah.
Uh, but it really turns into something of, one, we make money when they make money.
Hmm.
Uh, so the incentives are aligned. And then the second part is that at a certain point, the services we're offering within a node, they don't have they're valuable, but they don't have unlimited value. So we do cap it out, and
Yeah.
we recognize where we're going to stop. So I think
Mhm.
it's around being fair and
Yeah.
being reasonable.
Yeah, because what I can see here is this is, like you said, giving control to the customer, and they feel like they're not being ripped off, and then the businesses themselves actually get a huge value with the nodes, and they feel like they're not being ripped off, and everyone feels like they're being looked after. So I think that's really encouraging. But for this to work, does everyone need to be signed up to TODAQ or Nodelyst?
Yeah, so for the micro pairs,
Mm.
obviously for the businesses like our customers that want to make specific content or services micro payable, they want to cut out costs or access a blocked market, they use us. Their micro pairs have a pretty seamless 30-second experience
Hmm.
their first time when they're creating their wallet. And once they have it, they can load it when they need to. They can attach it to their browser or to one of their devices. And after that, it's just tap, 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 wherever they see something they want. Um, the Nodelyst was our answer for how does a micropayer discover all the other things that they can micropay for.
Right.
Uh,
Okay. Yeah.
so imagine you started your journey with sports, but then you heard that there was healthcare and publication and all kinds of other things. You're like, where'd you go? And you go to Google and you type micropay and you end up with 3 pages of garbage. So like that's not very good. So we created the Nodelyst as a micropayable classified, a Kijiji for micropay. And any business that has made themselves tap product capable can go to the Nodelyst and literally post up their offering of what they have
Mhm.
on there. They go and stick a badge link on the bottom of their site that says, I'm a Nodelyst partner. And it then means that wherever a micropay starts their micropay journey, they can usually click, go to the Nodelyst, do a very fast search for anything else they need,
Mhm.
and get there. And it makes it a cohesive and connected ecosystem. Um, I wish sort of the main search engines would work better, but they don't. So we built the Nodelyst.
Yeah, there you go. So it's sort of like we just tried to film our clip of the applications of this, but you've got a place where people can find all the applications and the businesses can see what they can
Yeah.
use it for, which is
And
brilliant.
then the Nodelyst will go live right at the beginning of April when we do our public beta launch.
Brilliant, brilliant. So it's all ready basically. Do you have any competitors? I mean, you touched on 100 that have failed before you. 30-year dream. How do you give forecasts on this stuff when there isn't really any competitors?
Look, there always are going to be competitors. You might have a flash in time where you're the only game in town.
Hmm.
It's important to recognize that it is a moment in time.
Hmm.
You have a moment of grace, and then the storm comes back. Today, there's about 15 to 20 live micropayment projects that we're tracking. The deeper you get into it, you find that they end up being siloed to a particular use case, to a particular ecosystem,
Yeah,
or you dig in and you look at their economics and realize that it's not actually
set up.
frictionless micropayments,
Yeah.
right? It's like we only go to 50 cents or whatever, and there's a 30-cent fee baked in there that gets ripped out, and there's all kinds of other nonsense. The places where I look and say, where is the competition going to come from? It's going to come from the most capable cloud companies
Mhm.
and a few others
Yeah.
where they have an unlimited war chest. And as it starts to grow, they're going to throw a massive amount of resources at it
Yeah.
uh, in order to catch up. So that's going to happen.
Mhm.
On the TODA technology side, we went off in a totally different direction than a blockchain. There's, I think, Knox Digital Assets. This is the partner of Eric Schmidt, who used to run Google. And they finally, about 4 or 5 years after us, came up with the idea of file-based digital assets, which is what Toda files are.
Mm.
So we looked at their solution. They have something that's about a third as capable as what we had 4 years ago. So, and I'm just saying that as a
Yeah,
statement of
yeah.
fact.
No, I can see
But
that.
that said, they're there.
Mhm.
Uh, and there will be others over time. Competition will emerge,
Yeah.
and they will catch up. And we're very cognizant to that. So we keep a very close eye on
Hmm.
everything that's happening in the space.
Yeah, so basically you're ready for obviously you've got the half decade ahead of everyone. But I guess some of these companies might even just decide, well, look, we can't beat what are some of your immediate catalysts. We've already sort of touched on it. And when do you launch? It's basically the end of this month, beginning of April, and it's not going to be a trickle, it's going to be a boom because it's already here basically. So yeah, I guess I've answered the question for you.
Yeah,
But I'll just outro here and see you hopefully see you on again soon. It's been
sounds
good
good.
though.
Thank
Thank you
you.
very much, Hassan, and we'll speak again soon. Cheers.
Bye bye.